The banking stocks seem to have started 2022 on a front foot. Since the year has begun, the Nifty Bank has gained more than 6%, while the outperforming IT index has slowed down a little bit, a tad bit on the negative side since the start of the year. Remember that 2021 was exactly the opposite, where the Nifty Bank gained just about 13.5%, while the Nifty IT index provided a whopping 60% return to its shareholders. But let's also have a look at whether there has been a turn of events and 2022 could look a little more different. The banking stocks are not out of the woods yet, because if you have a look at the ratio chart of the Nifty Bank to the Nifty, which will come up for you on the screen, it will show that there has been a constant lower high pattern that has been formed on this particular ratio chart. And for this to negate, this ratio has to close above the level of 2.2. So that will be the interesting level to watch out for as far as the Nifty Bank to Nifty is concerned. Now on the flip side, let's also have a look at how the ratio chart of Nifty IT to Nifty actually looks like, and that is exactly the inverse picture of what we saw before. There has been a higher low pattern that has been formed on this particular chart, and this to negate, it has to close below levels of 2 to 2.05. So that is exactly the level that we are watching out for as far as this particular ratio is concerned. Now the valuation picture does show that there is comfort in the banking stocks going ahead, because the estimate price to book value of the Nifty Bank stands at 2.4 times, which is more or less in line with what the 5-year average has been. While for the Nifty IT, the price to earnings ratio on an estimate basis is nearly 35 times as compared to 5-year average, which is way lower at about 22 odd times.